You're listening to The Luxury Item, the podcast on the business of luxury and the people and companies that are shaping the future of the luxury industry. Here's your host, Scott Kerr.
Wine prices have never been higher. Following an initial stumble at the beginning of the pandemic in early 2020, the wine market has since recovered and surpassed 2019 levels. Wine was one of the few luxury pleasures not affected by the pandemic. Many have attributed it to the riches built up from a decade-long bull market, which increased the pool of people who have the means to indulge their passion for fine wine. Wine is also starting to attract big money from investors. In the first half of this year, fine wine has significantly outperformed global equities and most commodities. Live wine auction revenues from major houses also hit record numbers. My guest today on The Luxury Item is Irvin Goldman, CEO of Acker Wines, America's oldest wine merchant and the largest wine auction house in the world. Irvin joined as CEO of Acker in 2017. Previously, Irvin was a financial executive with more than 3 decades of experience in investment banking, working for Salomon Brothers, Credit Suisse First Boston, Cantor Fitzgerald, and JP Morgan Chase. Welcome to The Luxury Item, Irv.
Well, thank you for having me, Scott.
Okay, let's jump right in. Acker has been in business for 2 centuries. It survived depressions, recessions, prohibition, and now pandemics. That's quite an achievement. I mean, there are very few American companies that are 200 plus years old. I could think off the top of my head, perhaps Brooks Brothers, Jim Beam, JP Morgan Chase, DuPont maybe. So what do you attribute to the longevity of the Acker brand?
Well, I think Acker was one of the first companies that specialized, at least in the as a luxury brand and a company that serviced the elite in society with and being a purveyor of very specialty goods from not only the country but all over the world, and it had gained a reputation of client service and access to fine and rare goods that the wealthiest people in society wanted. And I think it maintained that ethos throughout, its history. And, whether it was fine food, fine tobacco, fine wine, and it just became really well known for a place to get specialty items. And all our goods were on the Titanic. So when the Titanic went down, when there were stories that like there were goods for Acker. So they're kept through history being these events that were reinforcing the brand as being that specialty high-end purveyor of goods. And there were even in famous sports figures, whether it was Babe Ruth, Joe DiMaggio, people that it became known bought things from Acker. And I think that sustained itself. And it's interesting, past prohibition, Acker went into bankruptcy, and then out of bankruptcy, the people that bought it, the Capon family, they took that branding and applied it to just wine. And we were able to build a very successful retail operation and ultimately an auction business of fine and rare wine. So I think it's just really been part of the ethos of the company to be a purveyor of very fine goods. And, it's interesting because even, you see certain brands, I think the most obvious that comes to mind would be Marvel, that went into bankruptcy, and then, Disney bought them. and look what happened to the brand.
Right.
And they started making movies and stuff like that. So when you have a good brand, there are people that can take that brand and innovate and do things with it. And I think that it was very smart to focus on the fine and rare wine business post the prohibition. And it's enabled the company to do over $200 million of sales in fine and rare wine.
And when did it start getting into the auction business?
So it started getting into the auction business in the early part of the 2000s and started to really kick in around 2008, really. And that was by the third generation of the Capon family, who had basically bought the brand out of bankruptcy post-prohibition. And John Capon, who basically, with his dad, started an auction business, and then it was John that built it into a global auction player.
And you joined as CEO and minority owner of Acker in 2017, I believe. And coming from a long career in the finance industry, how did this opportunity come about? First of all, were you already a wine collector?
So the opportunity came about because basically through my brother, who was one of the largest clients of Acker's, and he was a huge wine collector. I had not been a wine collector previous to joining Aker. The Capon family had a need to raise capital, and I was at the time looking to invest and go in and run and grow a business. I was really focusing on healthcare and tech at the time. I went to take a look at the opportunity, and here I am 5 years later. So that's how it came about. It was really a reference from a major wine collector who happens to be my brother.
So when you took over as CEO and first looked over Acker's business, where do you see the potential for growth, and how do you act on it?
When I was analyzing Acker, I think there were three major things. One was the brand and what I thought the potential was to grow the brand, and I really think the brand was undervalued. So brand value was the first. The second was that it was what, in a niche business, it was one of the few global private companies, the other two being that were involved in wine at the time were Sotheby's and Christie's. So I thought that was very unique. Mm-hmm. And there was a unique opportunity there. And then the third was, it was a family business, and it had been in the Capon family for 3 generations, and it was run like a family business. So I thought there was a huge opportunity to take it from a family business and grow it into a medium-sized company. The combination of those 3 factors made it seem like a very unusual opportunity. And it really was one of those needle in the haystacks that, people spend, years and years trying to find that company, mm-hmm. That private company that has a lot of potential. And I had actually spent 5 years looking for different companies like that, and it's extremely hard. So it was really incredible that, that opportunity came up just from, a reference, as opposed to being out in the private equity market, actually.
So historically, the wine industry, one built on a bedrock of traditions, has not been keen on adapting to new trends and technology, but the pandemic, with its disruptive effects on the entire alcohol marketplace, forced many winemakers and wine shops to reassess their business models. With the New York City wine shop closed, how did Acker modify its business model to get its wines into the hands of consumers?
So we were very fortunate because, and actually lucky, because one of the things that that I did when I just had joined in 2017 is I made a huge investment in both auction technology and a website that had that was state of the art for the 21st century for e-retailing. And we had invested millions of dollars and many years developing it, and we literally launched the new e-commerce website 5 months before the pandemic hit.
Wow.
And we had developed, right when I came, a proprietary auction app. So in both instances, we had the technology that allowed us to shift very, very quickly. And what we did was, we closed, obviously the store and the walk-in traffic slowed down, and we went to a complete online model, and we had state-of-the-art technology to do it. So then what we did was we increased the digital marketing, digital advertising, as well as the amount of email marketing we did and phone calls to our clients, and did a lot of Zoom wine tastings, we have a very large corporate business where we supply wine to major companies, and we now have 350 corporate clients, and we were doing Zoom Christmas parties for them, and sent all their employees a bottle of wine, and then went over and discussed the wine, and they had parties, and it was just a transition to the digital world that we were very prepared for. We had to add staff for delivery, because delivery became the essential part, the warehousing and the amount of delivery vans and people we had. It was interesting to be able to hire people remotely and get the vans and do everything and increase the warehouse staff during that period of time. But we were able to do it, and our volumes went up dramatically. I mean, like 40%. It was just crazy.
And the pandemic also forced many auction houses in general to radically change the way they conduct business. Many of them quickly switched to virtual auctions, and wine auctions are a massive chunk of Acker's business. What changes did Acker have to make to the auction business?
So, it was interesting. I'll just say this. So we're the number one wine auction house in the world. And
Right.
we were already doing weekly online web auctions. We were doing our live auctions were hybrid auctions, because I do think we have one of the largest, if not the largest, global customer base. So we have people from all over the world bidding. So even though we would have something live in New York or Delaware, when that went away, the people that were used to bidding online with us, and our app that I had mentioned previously has live video on it for people to see the auctioneer and be able to bid either on a website or it's a mobile app, and it's very easy to use. So our clients were really already used to the ability to do it. And when we had a lot traditionally, there was a change going on anyway in the auction market, where the in-room participation had already transitioned, I think, since I started, to 20% being people that were in the room, to basically 5 to 8%. So most of the business was coming online, through apps, through a virtual experience anyway with us. And I just think we were so ahead of the game on this that it didn't make a difference. The experience of spending time with your clients, we hope our auctions are very different than your normal formal auctions. They're always at a restaurant. We serve an enormous amount of wine, so they're wine parties and auctions, and we're known for that. So it was a bit of a bummer not having the customer experience, but from a financial standpoint and auction success standpoint, it made no difference. And quite frankly, as we've gone back post-COVID, we are doing less live events. We used to do one every month. We're just doing, one or two a quarter, and we're doing much smaller bidding parties and things like that, because, just like remote work, people didn't really appreciate that you could actually work remotely and be that productive. And now we're in a hybrid world. The same applies to the auction market and live versus virtual.
Yeah, and the pandemic has made people much more comfortable buying and selling wine online, and many online wine auction houses also saw both the seller base and the buyer base become younger and more diverse and more global. Was that the same with Acker?
Yes, I think we saw it more in retail than we saw it online when you're specifically referring to a younger demographic. We saw it in retail as opposed. We saw more younger people involved in the educational Zooms to learn about wine during the period of time, but it really translated more towards the retail than it was the auction. There had been already a trend, if you will, of an increase in the 30 to 45-year-old range of new entrants into the market over the last 3 or 4 years. Those demographics tend to be just like, people in their 20s, much more computer and online savvy and used to conducting in a world like that. So we saw an increase in the amount of activity of existing customers in that demographic. We saw an enormous increase in retail in that demographic, online buying. And those were for the live auctions. We did see, like a 10% increase in the weekly web auctions, but that demographic really, really had a big impact on the increase that we saw in retail.
With younger audiences coming in, did that also change what you offered?
As a brand, right, we tend to be focused on fine and rare wine and higher quality wines, which tend to be more expensive. Like, for instance, the average bottle price in our retail is $59, right? And that's intentional. When I joined the company, I think it was $20, but my view strategically was that $10 bottles of wine, $15 bottles of wine, $20 bottle of wine. You see what's happening with Costco and the big chains, and they have these wines, they buy them in mass at a discount. And the history of the company was a luxury brand and higher and finer things. So our price point has shifted. It's not to say we don't sell a lot of $20 wines and $25 wines, but we also sell a lot of $100, $150 bottles of wines in the store. In our fine and rare retail, just to give people perspective, which is the majority of our business, the average dollar price of a bottle of wine is $1,000. So when it came to the online business, what we saw initially was the younger generations who were learning more about wine, buying $20, $30 bottles of wine to learn about wine and go through both our educational stuff that we were providing, as well as all the online activity. And they've, as they've found what they like, and they've gotten more interested, you see a pattern of them stepping up the price point, because those that, there are people that just like, okay, I want to drink wine, okay. and I like a good bottle, and these are the three brands or something I like, and I'll just buy them because I'll drink them. And then there are those that are really get into wine, the various regions of the world, get very, try a lot of different producers. And you see those people increasing the price point as over time. And those are the people that eventually become collectors. So I do think that takes more time, but we just did see an enormous amount of activity and new clients, basically in retail, from 25 to 45. It was just enormous, I think we had, I said our business volume was up about 40%, but our new clients were up close to 50, right? And it was mostly that age range.
So a couple of years ago, you launched an interesting market analytics site for wine investors. Could you talk about that? What's unique about this tool and how it works and who it's for?
When I joined, I had spent 30 years in financial services, and I was interested in learning about wine because, as I said, this was a business opportunity for me. I was not a wine collector at the time. So I wanted to learn more about wine prices, producers, trends, and so on and so forth. And I was shocked to find that really there was nothing out there that was comprehensive for you to learn about wine prices. And, the transparency was pretty weak about wine prices. So Acker had 20 years worth of data, and we went and cleaned the database with the purpose of creating an online platform of all our wine prices over the 20-year history of Acker. And then we put, and we want to make that accessible to anybody interested in looking at wine prices and the history of wine prices and how it compared to other financial assets. But so we created that platform, and really to look at it, we wanted to have the ability for people to look at wine the way they would look at the stock market. You could look at the stock market with general indices, and then there are specific industry indices, and then beyond that, you could look at individual stocks within a sector. And we wanted to create the same thing for wine, which we ended up doing. We created 200 wine indices to classify wine into like industry sectors, if you will, and regions and producers, so that people could easily, focus on a particular producer or region and compare it to other ones in the world. And we created a very, if you will, Bloomberg-like capability for wine. And it's on the website. It's free. It's available to anybody that wants to study wine prices, study how various different producers perform over time, how different regions perform relative to each other. Anything you'd want to know about wine, you can do on the markets platform. And it's very, very comprehensive. There doesn't exist any tool in the market that has the history of information, the accuracy of the information, and the analytics, the depths of analytics in the wine market right now. And people have started to, like anything, there's always good copycats. We started that trend, and you start seeing some of our competitors, some people that are involved in wine data, the wine data business, trying to come up with things to match what we have. But in my opinion, just as a financial person, there's nothing, there's no platform that's better than ours as of yet.
And from an investment standpoint, the best bottles of Burgundy or Bordeaux remain a far less volatile asset to own at this moment than many others, certainly stocks and bonds. So why is the performance of investment-worthy wine less rocky than stocks and bonds?
For a number of reasons. First of all, there is a perpetual supply-demand imbalance in wine, fine and rare wine, because one of the things that makes fine wine rare is that a lot of the production of these wines is small. So, over time, people drink them as well. So, you have one of these instances where you just have a dynamic where the demand for wine, which, by the way, keeps increasing dramatically, over the last few years, as more and more people understand it as a great investment asset. And so the demand keeps increasing, and the supply is limited just generally, but because of climate change and the impact that that's having on the wineries and their production, the supply is shrinking as well. It's a very unique dynamic for this asset class, and people that buy it tend to hold it. They don't trade it. So you don't see the type of volatility you see in the equity markets, where there's these huge sentiment changes based on like the macroeconomic environment or geopolitical environment. You don't get that in wine. It's sort of a steady thing. So this year, for instance, wine is flat generically, and there's some sectors that are down like 5%. But last year the wine market was up significantly, and basically it's one of the only asset classes that didn't give back 2021's gains. I mean, it maintained all of 2021's gains. And it was interesting because in the beginning, the first quarter of 2022, the wine market continued to go up. Mm-hmm. So all that really happened in 2022 was in the second quarter, gains it had in the first quarter, it went down. But as the NASDAQ was down 30% at one point, the S&P was down 20% at some point, and wine was just firm. And it's been like that historically. I mean, it's 7 times less volatile over time than the stock market, and it is the second best returning asset class besides global stocks out of any other asset class. It has unique characteristics, and people are understanding that. And then the final thing is that the market, the auction market, for instance, is about $500 million a year. So it's not on a relative basis this enormous market. The secondary market is about $2 billion a year of fine and rare wine turning over. So if you think about the available supply turning over in a year in fine and rare wine, it's somewhere between $2.5 to $3 billion. It's not an enormous, relative to other asset classes, it's just not an enormous one. And people are realizing it's one of the best ones. So, we expect the same relative outperformance of wine, especially with climate change going on and the amount of people, new entrants into the market in terms of investment. We're starting to see people that are not drinkers of wine and starting to start wine funds just for the purpose of investment and giving people access to investment vehicles to access wine. So the demand keeps increasing, and again, the supply is limited on its own. And if climate change keeps affecting production, the supply and demand imbalance will just keep getting worse for new production, which makes the older productions even more valuable. So that's the story with the wine.
So Acker now accepts digital currencies for payments at wine auctions and its New York retail store. How does that whole process work? And did it stem from the increase in younger wine collectors and auction participants?
It's interesting. No, it actually stemmed from some international client requests, a number of years ago. And what we did was we just found a payment processor that was involved in the cryptocurrency world, that was willing to take all the crypto risk. And there are a number of them now where you just give them a US dollar invoice and the customer deals with the cryptocurrency with the payment processor, and we just get dollars, right? So we did that early on. I think over time, what happened is regulations started to increase in international countries, and the activity, once the regulation went up, started to decrease. For the last few years, as the crypto market, became more and more in vogue, we made more and more efforts to get involved in that world, either through NFTs, blockchain. But I have to tell you, the reality of it is that there really has, to my astonishment, been very little interest in people wanting to pay for wine in cryptocurrency. And it was interesting. I went to lunch with one of the leading crypto trading firms and investment firms in the country, because it was a bit of a puzzle to me. And it was one of the most enlightening conversations I had. And what they stressed to me was that people in the crypto world are heavily invested in the crypto world and everything in that universe. And what they're not interested in doing is crossing over the digital world into the physical world. That is like for the believers in this market, and the idea of having a decentralized digital world, they don't want to cross over. And you see a lot of products and NFTs coming out from name brands. It's not clear to me at this point how successful that really is. We've done a lot of marketing. We did do an NFT, one of the first. And,
can you definitely talk about that.
So we did the first NFT with one of the top producers in the world, Comte Ligier Belair. And what he did was he had 9 vineyards, and he had his newest production, the 2019 vintage. And what he did is he always keeps the first bottle for himself, but he auctioned the second bottle, and he did a video tasting note of the bottle of wine, and talked about the vintage of that particular vineyard, because there were 9 of them. We sold that with the bottle, and they went for about 3 times the normal price. But it was interesting. Nobody has asked to trade them. They've just held them, and they own the wine, right? So it was novelty, and we wanted to see whether we could pick up on that by doing NFTs on special bottles of wine. And it really, it never really took off. There are some companies like overseas that are working with producers to go directly by, selling the concept of it being an NFT on the bottle and then having a digital signature for authentication. I can't tell how successful they are or not. I go on what's known as Etherscan, which monitors the activity that you can see on a blockchain to see how much activity there is. And I don't see a lot. So I'm still not clear whether, in terms of just NFTing a physical bottle or trying to sell wine for digital currencies, that is the avenue that is ultimately going to be successful in the wine industry. I think the area that blockchain will be very successful in wine is in the infrastructure and the operations related to it. So it's everything from authentication to shipping to payment, processing and tracking, and making things seamless globally. I just don't know whether I believe that blockchain as a forum for selling wine will be successful or not. We have tried, and so far it has not, to my dismay, because I'm a very big believer in blockchain. But that's been our experience so far. So, right now I see a lot of marketing, but not a lot of substance.
How do you see the fine wine market playing out the rest of this year?
I think that, we're getting to a period of time where the uncertainty of the macroeconomic environment is becoming less uncertain. The Federal Reserve, everybody is aware of their fight against inflation, and they're going to do what they need to do. We're already in an economic slowdown. I think the markets are, just a few months away from completely discounting it all. And I think that in that environment, the wine market stays steady. And I think when the markets start picking up again, I think wine will start going up again. But I don't see wine going down.
So, Irv, my final question is the luxury item question, which I ask all my guests. If you were stranded on a deserted island and you can only have one luxury item with you, what would that luxury item be? It can't be any form of air transportation or water transportation or anything that requires mobile service. It's just you on that island all by yourself, surrounded by sand, palm trees, miles and miles of water. What would that one luxury item you would like to have with you?
Well, I guess it would be Wagyu beef. And if it wasn't a food item, it would be, if it wasn't a food item, it would be a Toto toilet. That's a different answer, I assume, than you normally get.
Yeah, I did not expect that, how you went from Wagyu beef to a toilet. So, but they're both luxury items.
They're both luxury items. One's food, which, if you're on a deserted island, you have plenty of water, so you'll have plenty of fish. So I figured I'd go for beef. And then if it couldn't be a food item, it's like, it's either something that's shelter oriented, like a bed or something else. But I just thought having a Toto toilet would be a unique thing to be on an island.
Irvin Goldman, CEO of Acker, thank you so much for joining me on The Luxury Item.
Thank you for having me. It was fun.
That's it for this episode of the Luxury Item Podcast. Thank you so much for listening. If you found this useful and entertaining, I would be really grateful if you can share it with a friend or colleague. I would love it if you subscribe so you never miss an episode. And while you're there, be sure to rate and review us on Apple Podcasts. It really helps other listeners find us. The Luxury Item Podcast is a production of Silvertone Consulting. I'm your host, Scott Kerr. Until next time.